Okay, what is up, traders? What's up, tycoons? Super excited for today's video. We're going to break down natural gas. Okay, we're going to look at UNG. We're also going to take a look at oil, and we will break down actually the spot prices of natural gas. So make sure to smash the like button, subscribe to the channel if you guys are new, and we're just going to jump straight into it. So what we have here is our ABC structure along with the MACD and RSI signals with the major Fibonacci levels. These are the major Fibonacci levels right here in yellow, the 61.8, 50%, and 38.2. These are the three most common and well-respected retracement levels there are. Now, when it comes to using the MACD as well as the relative strength index, what I like to do is I like to try and find divergences. So a quick example of what a divergence is, if you take a look here, the price of UNG is clearly going up, right? We have a high here, then we have a higher high up here, and you look at your relative strength index, what do we have at those points? We have a high and a lower high. So in this case, it's a bearish divergence, and UNG was losing relative strength as the price was increasing and going up. What does that coincide with? Well, we end up getting a MACD crossover to the downside right around that time. And typically a crossover to the downside is going to be an exit signal. So we had two things really kind of combined together right here to give us a, possible short entry or a reason to close our long position and really protect the trade. Now, there was a head and shoulders over here. And, I just wanted to highlight basically, the different divergences, how we're using them. Currently, if you take a look, okay, we have a low here and we have a lower low. Now, on our relative strength index, what do we have? We have a low and then we have an equal low. So in this case, we have a slight bullish divergence. And remember, these divergences are indicators of future activity. They're not guaranteed. No one strategy is 100% guaranteed. But once you start to combine strategies together, that's how you can give yourself an edge in the market and really feel confident in your trades and taking those trades. Now, before we dive into UNG and oil in more detail, we really need to pay attention to the spot price of natural gas, because that's what's really going to be affecting, the prices of these things that we're looking to trade, whether it's UNG or oil. Now, here we also have the MACD and RSI signals, and there's been many, many divergences throughout the price history of natural gas. If you take a look over here, making higher highs, then we're making lower highs on the relative strength index, combined with a bearish crossover on the MACD. Two things giving us a reason to possibly take it short or, close a long position. Over here, we actually get a bullish divergence, making lower lows while making higher lows on the relative strength index, get a nice crossover. And this has happened and repeated itself many, many times. Now, similar to UNG, we do have a bullish divergence currently at the moment. So if you take a look, all right, we have a low right here, and then we have a lower low right here. Okay, now on our relative strength index, we have a low and we also have a higher low. So this does indicate we could see some bullish activity in natural gas, which is why I've started a position. Okay, so in full transparency, I do have a position open in UNG right now. No surprise, I'm down on that position, but it is a starter position. It's a very small position, and as things accumulate lower, and if we break some major support levels, most likely I do plan on adding to them. Now, what's really interesting is that we've normally gotten a MACD signal each time we've had these divergences, right? So, what we're seeing now on the MACD is it's actually very, very flat. So the MACD has not started to curl up and really give us that upward momentum that we're looking for. And that could be a little bit of a red flag here, right? We have the bullish divergence. We're starting to get a little bit of a bounce, but the MACD is not coinciding with it. Now, if this thing really starts to gather some momentum and really start to trend upwards, then that could go ahead and give us the bullish push that I know a lot of people are looking for. But time and time again, these bearish divergences combined with a sell signal or a bullish divergence combined with an entry signal, they've been working pretty well. And it's just interesting to see what's going on now. Now, of course, there's lots of geopolitical concerns and a lot of things happening. I covered a lot of that stuff in some of my in my last two videos that I made on natural gas. So if you're looking for some news and concerns about the geopolitical situations, make sure to watch those videos. But for now, we have this bullish divergence, and we need to actually be cautious here. Okay, this red trend line, this is our bearish divergence trend line where we were making higher highs, but then started making lower highs here. This trend line is still going to be very important. Okay, and notice how we're starting to form a little bit of a triangle pattern here. If we do end up getting a bounce, if you want to be bullish on this, we need to break past that bullish divergence or that bearish divergence trend line. Otherwise, this could slap, the strength back down and ultimately pull the price back down as well. So keep a close eye if we continue to bounce upwards on this initial bearish divergence trend line that was a big part of the drop. Now, we're testing some of our lows here. Okay, we recently just tested our 2.2 low on the price of natural gas. If you take a look, we are basically testing the 2021 lows right now, or we're actually lower than them. Okay, so this is the beginning of 2021 right here, and this is December 2020. And you can see 2.2 is that support level that we just tested and bounced off of here recently. And that's all the way from back in December 2020. Those are the lows. So natural gas is definitely at some historic prices right now, and very, very low. Now, here's some of the current levels just zoomed in a little bit more for you guys. So, remember, we talked about that bearish divergence and the bullish divergence right here. And here you can really see that what I mean on that MACD, it's just very, very flat, okay? Not really giving a clean signal to the downside or to the upside, and remaining relatively flat. Now, notice over here, whenever it chops, okay, which could be the situation that we end up forming is a very choppy MACD. Look at what happens in that time period. It follows the trend, right? So, the trend is definitely a downtrend. Okay, we are trending lower and trending downwards. And if the MACD continues really just to hover before giving any clear direction, then most likely the price of natural gas will continue to hover. We have that 2.2 support, and also 187 is going to be another support level that I'm looking at for a potential bounce. If natural gas breaks that 2.2 level and continues to head lower. Now, let's dive back into UNG. All right. And what I want to highlight here is the Fibonacci rejection. So remember, I said that the three most important retracement levels are the 61.8, 50%, and 38.2. This is going to be a really good visualization for you, and also help you understand why you should use these, or why I use them as well. Remember, they're the most common and well respected. There are other retracement levels, but these three right here will do a lot of good work for you. So if you notice, we have the downtrend, we have a retracement up to our 61.8% level, and we can't close above it, and then we end up continuing that trend. So that's what you use these for, is you use them to spot trend continuation or trend reversals. Nothing moves in a straight line up and nothing moves in a straight line down. You get a move up, retracement, continuation of the trend, or a move down, retracement, continuation of the trend. You can use this also to spot reversals. If you move down, retrace, consolidate, and then break through those retracement levels, you can spot a potential reversal to the upside as well as to the downside. All right, and that's what we've been looking for, but we've been getting trend continuation, right? We have move down for trace, continue the trend, okay, retrace, continue the trend, retrace again, continue the trend. And we've done that over and over again so far on UNG. Now I'm looking at an ABC structure right here. So basically like a large 3-wave move to the downside, and your wave C typically, okay, is going to be the 1.0 extension of your first 2 waves right here. So if that does happen, and if this continues to drop and this continues to play out, this structure plays out, the 1.0 structure of, our A to B wave right here is going to be 7.52. So we've done a really good job of holding our support levels so far right here on UNG. We're really just flatlining and holding that support level. Now remember, the more times you test the level, the weaker it gets. So if we keep testing this level right here, right around 822, there is a strong chance that we could break it and come back down to the 752 level right here. So it's going to be really interesting to see what happens there. Now, if you look, we recently just hit all-time lows on UNG. Okay, so this is us cracking that 822 level, and we came all the way down to $8. This is a 1-hour chart. This is a smaller time frame, but you can see, we did break that, and UNG is making all-time lows. These are the previous lows over here in 2021. and also the daily gap. So this gap, if you're not familiar with gaps, these fill about 90% of the time historically. And what it is there's a space between this candlestick and the next preceding candlestick, okay? These gaps fill about 90% of the time. The big question is, when are they going to fill, not if they're going to fill. And you can see that this is in December of 2020. Okay, and we're just now filling it, right? We finally filled that gap, and we're actually trading below there. But this gap, I think, has a large has been a large factor in some of the price action of UNG, and it's really just been drawing it, right? We really needed to fill that gap. We filled that gap, and we've continued heading lower. So it's going to be interesting to see whether we continue this trend of dropping, hit that 750 level, and potentially even break that. Or do we start to see some type of a bounce? You know, this was our support level here at 822. We had a 904 support level, and we also had a 1031 support level, and we just crushed basically all of them. We're testing that 822 support level today, and really the past week we've been hovering right around that range. Now, this is the daily chart zoomed in a little bit, okay? And so what we can see here is we do have the slight bullish divergence, okay, where we have a low and we have a lower low. So clearly, you know, it's been in a downtrend, but when it comes to relative strength, we have a low and we have an equal low, and we've started to bounce. So we have a slight bullish divergence. Now, the MACD also gave us a crossover to the upside. So we're seeing good things when it comes to some of the indicators, but there's been no follow through in the price action itself, which has been really interesting, right? So we have the slight bullish divergence. We got a MACD crossover to the upside, and it's doing a good job of picking up momentum and putting some space in between that blue line. But as I mentioned, there's been no follow through really. Now, this tiny little line right here is actually that gap that I was telling you guys about earlier in one of the previous slides. And you can see, you know, we really have just been attracted to that. Now, there's plenty of gaps up here on the daily chart that are going to be pretty important. But we have to remember what we've done with our major retracement levels, right? Each time we've moved down, we've rejected the retracement levels and continued the trend back down. That doesn't have to happen again, but these are areas where you want to be very cautious trying to go long, as you know, there's a high likelihood of a strong resistance around these areas. So I'm going to be looking to see if we can get some type of follow through and potentially come up to our 38.2% retracement level right around 13.23. But if you take a look, all of our prior support levels, okay, have now been flipped to resistance, and we're definitely going to have to break through those first. So those are going to be 904, okay, 1031, and also 1167 are going to be some roadblocks on the way heading up to our major retracement levels around 1323, 1485, and 1647. So, you know, those are definitely some of the key areas that I would pay a lot of attention to when it comes to resistance. Again, you know, we are seeing some good signs when it comes to the RSI as well as the MACD, but there's been no follow through on the price action. Now, this is Boyle right here. And Boyle, remember I said you can use the FIBS to also spot reversals besides trend continuation. Like clearly we have the move down retracement, trend continuation. Okay. Over here is a really good example of spotting that reversal where we make a high and then we actually come in here and make a higher high. And what do? We come down, we retrace, we consolidate, and then ultimately we break through those retracement levels and we make a new high above our previous high. So, you know, that's a fib reversal right there. And then ultimately that ended up just crashing back down. And then we retraced, continue that trend. Now, Boyle also is at all-time lows and making all-time lows. It's been really tough. I know a lot of people are underwater on Boyle. And we broke through our major support level here of 795. Now we do have a support trend line here that if we continue to head lower, we could bounce off of, but if this thing continues to head lower, man, it's really, really rough. Okay. So below 795, my next support level here is going to be at 321, which is pretty far from where we're at right now. I mean, it's only a couple dollars, but when you think percentage wise, you know, it's a pretty big drop percentage wise. So be very careful if you're trying to play Boyle. I definitely think that, you know, the leveraged ETFs like Boyle and Cold, okay, in my opinion, those are more for day trading. And so you can, you know, just use those to capture some of the day trading possibilities there and get some nice, you know, quick intraday moves or even scalps. Now, on Boyle, okay, we have some of the same things that we've been looking at. Okay, we have a slight bullish divergence where we're making equal lows on the relative strength index. We've had a huge move to the downside, but we haven't lost relative strength. We've actually held relative strength and had the same amount of relative strength as we did back here in November. So pretty interesting to see that. We also got the MACD crossover to the upside as well. But like I said, there's just been no follow through with the price action, right? So we had, MACD crossover. We've got some bullish divergence here, and we're really just still continuing to trend lower. So it's a very tough game to play right now if you're trading natural gas. But hopefully this video will help you navigate, and hopefully you learn something new. If you did, smash the like button and subscribe to the channel. That's going to be it for today's video.